Chapter 8. Are dividends right for me? Our goals can only be reached through a vehicle of a plan in which we must fervently believe and upon which we must vigorously act. There is no other route to success. Pablo Picasso. I have yet to find a strategy that works nearly as well as buying and holding a portfolio of high-quality dividend growth stocks. It offers investors several key advantages that we have touched on in this book. Since 1972, companies that have grown their dividends outperform the average stock by more than 3 times. Past performance is not an indicator of future returns, but it does indicate that dividend-paying companies have historically done quite well over long periods. Less price volatility. In 2008, the S&P 500 fell by 37%. The dividend achievers, 10 or more years of dividend growth, decreased by only 25%. To achieve the same risk profile with index funds, you would have to own 30% bonds, which reduce future returns. Higher realized future returns. Since a dividend investor doesn't need to own as many bonds, they can outperform the average investor even if they don't do a good job of picking stocks. A 100% dividend stock portfolio that underperforms the S&P index by 1% per year is still likely to beat an 80-20 stock bond portfolio of index funds. Higher current income. The S&P 500 produces a dividend yield of approximately 1.9% at the time of this writing. A high-quality dividend portfolio would generate close to 3% or more. That's more income to live on now or reinvest into ever more streams of growing income. Little chance of losing money over the long term. If a dividend growth portfolio starts with a yield of 3% and grows by 6% per year, it has literally no chance of losing money over a 20-year period. Income that grows faster than inflation. Dividend growth stocks continue to increase their dividends year after year, usually faster than inflation. Bonds and annuities, on the other hand, have flat income. Emotional anchor. Focusing on dividends rather than market prices helps you stick with your strategy when stock prices are down, rather than panicking and selling at the bottom like so many of your friends will do. Is building a dividend growth portfolio worth it? You bet it is. Focusing on constant fluctuation of stock prices and your account value is not a good way to invest. A dividend investor can ignore falling stock prices, even cheer for them, and look towards building a stream of consistent, reliable, and growing income for many years to come. These dividend payments can be reinvested to produce great masses of wealth, or used to fund your living expenses once you stop earning a paycheck.